It's a tough being a brokerage business. I mean, I've always said, we've done some things in the past, some of our companies where it was kind of success based in different ways. Like if we can save you money or do something, we get paid. And I've always made the joke, like I've never had good luck working for free. And so I think it's challenging to be in a business where you have to be success based. If the customer wins, you win. I mean, it's a great alignment, but it's not easy. You have to be good at what you do. You have to have high deal flow. What have been like the challenges over the years with building a business like that, where you're not necessarily getting, recurring or reoccurring revenue, and you've got to plan for having employees and plan for growth, yet not knowing, is oil going to drop and there's going to be less deals or interest rates, or how's the macro going to impact things? Just talk through how you guys have been able to be successful doing a model which is, it's transaction based, which is not guaranteed.
Yeah, and there's a lot of definitely macro factors outside of our control. I mean, the price of oil and gas definitely ebbs and flows and has a big impact on our business. And in building a business like EnergyNet and some of the other companies that we're running right now, you have kind of a chicken or the egg problem, where if we have, in our early years, maybe we had a ton of sellers with really great solid assets, but if we didn't have the right buyers come to the table and participate, then they wouldn't get as good a results as they could have. So, and then the flip side, if you don't have kind of a steady stream of inventory and quality assets, and the buyers seem to trail away. So in the early years of a marketplace business like ours, you're trying to solve that chicken or egg problem. You want your buyers to be engaged and get a steady stream of great opportunities or quality opportunities, or what they might consider deals. And then from the sellers, you want repeat business. And so that we really pride ourselves on turning a first time seller into a repeat seller. So there's companies like Chevron, like EOG, Devon Energy has just had ConocoPhillips has had really great success. It's kind of year in and year out, but it's a proven process. It consistently works. 8.5 times out of 10, you're going to get the deal sold and have a great outcome. So, trying to create that flywheel effect where you have enough quality assets to bring to the market that keeps the buyers engaged, keeps them participating, is really key. It's kind of difficult to start a business like this. If you don't have the assets, the buyers will drift away. So you're really trying to create that fair environment, create a steady stream of great opportunities, and have good outcomes for both the sellers and the buyers. So if you recall the movie Full Metal Jacket, the Matthew Modine character, he has like the peace symbol and the Born to Kill on his helmet. And his superior gives him a hard time for that, but it's like the duality of man. When I'm a buyer, I don't want any competition, but when I'm a seller,
Yeah.
much competition as I can get. So sometimes, there's a situation there where it can be, and we've been in situations where we're selling a deal for a client and they're also buying another deal on the platform, and it's like they're talking out of both sides of their mouth. They're like, my asset is the best thing on our earth, and it should be valued at this price based on these parameters. But this asset that I'm trying to buy, it's no good. That asset is no good. I don't know why anybody would want to own it. That's why I'm bidding on it. But it is kind of that duality of man, where you're trying to, as a seller, you're trying to maximize value. As a buyer, you're trying to get good deals and invest right and buy right.